Hey folks, this is Rainer here from tradingwithrainer.com. So how are you guys doing this week, man? So as for me, I'm in Singapore and right now the main theme for this month, I mean the previous month actually was we had the Hungry Ghost Festival, right? For those of you who are not aware of what the Hungry Ghost Festival is, it's basically when in the Chinese calendar the seventh month where sorry about that, where the spirits of the other world will actually come out and they are free to roam the earth for the one whole month. So what happened is that this week the Wednesday, the gates of the other world actually close up. So basically they have actually returned back to where they came from. So that was happening throughout the entire month of August for me down here. And if you guys happen to notice, we have offerings on the floor everywhere on the streets because those are actually offerings for the what you call the spirits who are roaming around for this one month. So yep, that's what the main theme was in my country, and I hope you guys are doing well wherever you guys are. So nonetheless, I would like to welcome you guys to my weekly analysis. So what I do each week is that I post out trade ideas, and hopefully you guys could actually take advantage of those ideas I post out. So how I go about doing it is I look at the weekly chart and I identify the trend or whether the market is ranging, and I'll drill down to the 4 hour or the daily time frame to actually look for entries and exits. So nonetheless, let's get straight to the charts. Alright. So this week I'll be focusing a lot on actually the British pound because I find that the pair is actually at critical major levels across the board. So nonetheless, the first chart we'll be looking at is the pound Canadian. So this is the pound Canadian dollar. So let's see. This is the weekly chart, and let's zoom out a little and let's notice the key resistance level in play for this pair. So I'll highlight it out here. Notice here the 164 tested once down here, right? This area here, another time here, and right now we are at this 164 level here again, right? In fact, we already see price bounce off the 164 level. So for those traders who are not short, like me, I'm not yet short. How are we going to get short this pair? So what I'd like to do is I'll go down to the 4 hour chart, alright? And I'll look for price to retrace back upwards next week to look for shorting opportunity, alright? Thus, what I mean is that on Monday, Tuesday, when the market's open, I'll expect price to actually head upwards, retrace back upwards, and I'll look to short this pair down, alright? So if price continue to tank on Monday, Tuesday, or Wednesday, I'll forget about shorting this pair because I wouldn't want to pay and I wouldn't want to short at such a a low price. I'd rather short at a higher price. So where will I look to short? What I did is I take my FIB retracement tool from this swing high to swing low, I draw it down, and I'll look to short around this area here, which is the 50% and the 61% retracement. This area here, I'll look to short, alright? So I highlighted in green, and where will my stops be, alright? So logically speaking, it'll be at a swing high. I wouldn't want to place it here, but rather I'll place it here, the most significant swing high. So you're looking at stop loss of about, let's see, of around 170 pips, and as price approaches the 162 level, I'll set it to break even, alright? So that's my game plan for this pair. So where will I look to start to take profits? Looking at that, I'll have to go down to the daily chart, which is here, and actually you can notice that this pair has a huge potential move to go. Alright, let's look at the weekly chart instead. It can potentially go back down towards the 153 level here. Alright, so it's a massive risk reward trade. Alright, so looking at it, it's a potential, let's see, potential 200, 1 to 5 risk reward, a potential 1 to 5 risk reward, 1 to 5. So definitely look for retracement back towards the 50% and 61% area and look to short this pair down towards the 153 level. Alright, for those of you who missed out, I'll highlight it out again. So I take a FIB tool, swing low, swing high to swing low, right, and hit this area here, which is about the 163.45 level, yeah, around there. Alright, so that's for the pound Canadian. Looking at the next pair will be the pound New Zealand. Similar story. This is the weekly chart, and you can see that the pound New Zealand is actually weaker than the pound Canadian dollar. Alright, so you can see that price is still ranging. However, price failed to even reach the high of the resistance compared to the pound Canadian. So it only reaches till the 2.0 level, which is a very significant number, a level as well. So you can already see that price form a bearish engulfing this week. This candlestick pattern here, right? A bearish engulfing. So how are we going to go short? Alright, would you want to short at the open next Monday? Not really. What I'll do is similarly, I'll look for retracement. So again, on the 4 hour chart, I'll take a swing high to swing low, and I'll look to short around this region down here. Alright, as price retrace back early in the week, I'll look to short. Alright, so do take note that we are dealing with a multiple pound pairs this week, so you may want to spread out your risk across the board. So for example, if you usually risk, for example, 2% a trade, right? If you're taking 2 trades, each trade risk 1% instead of your usual 2%, alright? Because should the pound suddenly appreciate the coming week, you most probably be stopped out against all your trades. So if you usually risk 2% a trade, I'll suggest you spreading the risk across the different British pound pairs, alright? So for example, I've given you £2 example, so it is optimal to actually risk 1% for each pound trade, alright? So that's what I feel, okay? So, and lastly, another pound trade. Do I still have another? Alright, that would be the... Sorry, let's look at the New Zealand Swiss franc first, alright? New Zealand Swiss franc, again, what I've noticed is that the 76 level is actually level of resistance one time. This one almost tested, and right now price is approaching this level again. So do look out for this level, alright? Potentially reverse and hit down lower. So again, could form a pin bar or engulfing pattern. So that would be a signal to go short. Okay, so that would be for my New Zealand Swiss franc. Now looking at Canadian yen, right? Let's look at Canadian yen. So what I've identified is actually a potential harmonic pattern. So let's see what this pair has been doing in recent time. This is a daily chart, and we can actually both agree that this pair actually has been ranging, right? So came down and now it's been ranging for quite a while, right? So between the 97 level and the 92 level, which is about a 500 pip range, right? So what I've identified is actually a potential Gartley pattern, if I'm not wrong. So let's go down, zoom in the chart on the daily chart, and let's see how to draw a Gartley pattern. For those of you guys who do not know how to draw a Gartley pattern, I would suggest going to my trading videos and look up how I go about doing it, because I explain in quite detail and you guys would understand better. So basically, swing high to swing low, alright? So we can see that, sorry, it's not a Gartley pattern, it's a bad pattern, alright? So we can see that price tested the 50% retracement, so we are expecting a bad pattern this manner. So I think my fib expansion too, right? And I look for the 886 level. So we can see that the 886 level has confluence between the 97 level, alright? The 886 terminates here, as well as the 1618 level. So this area, I'm expecting price to terminate. So in the coming weeks, I expect price to go higher, touch this level and head downwards, alright? So where will my stops be? That's a very perfectly logical question. My stops will be above this swing high here, which is above the 97.63 level, alright? So we have a potential bad pattern that is forming. So let me remove all this, never mind, I'll just draw a bad pattern out. So you can see here. So I expect price to terminate around the 97 level and head down lower in the coming weeks. I think it'll take probably a few weeks to play out. So let's watch 97 level for this Canadian yen and see how this pair plays out. So, and last but not least, I'll be looking at the British pound dollar. Again, another pound pair. So yeah, so I've been mentioning that the 157 level will be a level to look out for. So what we had on Friday was a non-farm payroll, and price came out, took price higher before retracing back lower. So again, what am I expecting in the coming weeks? To be frank, I wouldn't go short just right yet. What I'll do instead is expect price to hit higher, test the 157, show sign of rejection before coming back lower, alright? Or more aggressive sellers, what you could do is actually zoom out, right? You can see this area here. As price approach the 157 level, sell it and have your stops above here, alright? So notice that this week I've actually go through with you three British pound pairs. Spread your risk because they are all pound related, alright? How do I do that? If I risk 2% a trade for any one pair, now we are dealing with 3 British pound pair which are correlated. You take 2%, divide by 3, so each pair you'll be risking about 0.67%. Wow, my maths is good. Yeah, so each pair risks about 0.67%. So should you get stopped out on all 3 pound trade, you lose again only 2% of your account. So yep, that's all for my weekly analysis. I hope you guys find it useful. If you guys actually do find it useful, you can actually go down to my website at tradingwithrainer.com, and there's a lot of free materials down there for you guys to actually explore, to learn, and just sharing of my knowledge, and I hope you guys simply benefit from it. Nothing to sell, no gimmick, no hype, and no bullshit. So with that, I wish you good luck and good trading. Thank you.